Welcome back. Let's take a look at an exercise in which we have to work with a sales allowance. On April 25th, Foreman Electric installs wiring in a new home for $3,500 on account. The words on account means it's a credit transaction. They didn't get cash. They will get it in the future. A couple days later, on April 27th, Foreman's electric work does not pass inspection. Foreman grants the customer an allowance of $600 because of the trouble. The customer makes full payment to the balance owed, excluding the allowance on April 30th. So here what we are looking at is a company has performed a service. It's whether you deliver goods or services, whatever the case may be. If your customer is not happy, and obviously it's because of something that you did that was not up to par, in this case, your work did not pass inspection, you had to go back and fix something. You're going to fix it for free, but the customer is still unhappy. So you're giving them a reduction in their invoice price. There are no returns. Even if you had sold them goods, they're not returning anything. So this happens even in the next chapter, you'll see with inventory. If you sent the wrong inventory, as in the wrong color, the wrong size, there may be a small dent or a scratch on the packaging, and you don't want the inventory to come back to you. You offer the customer a sales allowance. It's basically a reduction in price. It's a loss for you, but at least that sale is complete and you're not going to have an issue with that. Customer satisfaction is very important. So let's take a look at what I will do now. My journal entry on April 25th, the date of the when I performed the service, is accounts receivable debit, sales revenue credit, and that amount is $3,500. Now, 2 days later, my customer is unhappy with me, and they come back and they tell me that they don't, in this case, my work did not pass inspection. So I give them a sales allowance. So what I'm doing over here is I'm crediting accounts receivable. Remember the amount they owed me, $3,500? I'm going to credit that $600. I'm basically reducing the accounts receivable for them by $600. I don't debit sales revenue, I debit sales allowance. This is a contra revenue account. This is similar to sales discount. I will reduce it from my sales number. Now, a couple of days later, on April 30th, they make the payment in full. So they're making the payment, so I take accounts receivable off my books. How much did they owe me? What they owed me over here is $3,500 minus the $600. So what they owe me is $2,900. They're paying me the $2,900. I'm getting the cash $2,900, and that settles their account with me. Once again, I gave them a break in price. I reduced the invoice price so that the sale could be completed, and I have hopefully a happy customer, and I'll get referrals from this customer. In my income statement, I will have service revenue, and that number is $3,500. I will subtract, it's less sales allowance, and if that number is $600, so my net sales number, the net service revenue is going to be $2,900. So this is the number that's reported. Now, why do we worry and why do we care about this account? This is a contra revenue account. We care about this because it's an for internal management purposes, decision-making purposes. If I have one too many sales allowances, it means it possibly is that my work is not passing inspection repeatedly. I need to look and see what's going wrong. Is it my employees are not trained? Do they need to be retrained? Am I hiring people who are not good enough? Or perhaps I'm using some parts that are shoddy and I need to change the vendor who I buy the products from. There could be any number of reasons. I need to study this very carefully to make sure that this is not going to hurt my future revenues. Once again, sales allowance is a contra revenue account.